Hello guys, and welcome back to another video. In this video I'll be explaining to you what an open low high close bar is, and I'll also be explaining to you what an open high low close bar is. So first off, an open low high close bar is simply a candlestick which has a opening price as shown here. From the opening price we form a low, from the low we expand up to form a high, and then from the high we have a retracement to then form the close of the candle. And open low high close bars are typically bullish candles. Now these bullish candles can be formed on any time frame. So here I have an example of what this would look like on a lower time frame. Say for example this was a daily candle. This could be your 15-minute time frame, and this is what it would look like within this candlestick here on a lower time frame. So as you guys can see, we open up at the opening price, we then drop below the opening price, forming the low of the day, before having an expansion move to the upside, forming the high of the day, and then retracing off the high to then form the closing price. Now when I am bullish on a specific day and I have my draw in liquidity in mind, I will look to buy below the opening price or close to it so that I can capture the lion's portion of the move to the upside. So now I'm going to explain to you what an open high low close bar is now. So same thing but just in reverse. So here an open high low close bar would represent a bearish candle. So we open at the opening price, we then have a manipulation to the upside or a Judas swing, forming the high of the day. We then trade from the high of the day, forming the low of the day, before having a retracement to form the closing price, and we close right there. Now say this was a daily candlestick and this was your 15-minute time frame. This is how it would look like. We open up near the opening price, we have a Judas swing or manipulation, and then we distribute to the downside, forming the low of the day, and then closing price. Okay guys, so I want you guys to notice how we can incorporate accumulation, manipulation, and distribution, or also known as AMD, or power of 3, into this concept of open low high close or open high low close. So get our accumulation, get our manipulation below the opening price before distributing, forming the high of the day, and then closing near the close. And the same thing would be said for a open low high close bar. Now a question you might be asking is, how do I know whether the next daily candle is likely to be a bullish candle or a bearish candle? Well, the simple answer to that is that I simply have a draw on liquidity that I am looking to target. So whether that be an old high, an old low, a fair value gap, or whatever PD rate of your choice. So basically wherever I think price is likely to go, that will help me to frame my bias on whether the next day is likely to be bullish or bearish. So with that being said guys, I think the best way to now explain this is to get into a bunch of examples. Alright guys, so currently I am on a daily time frame on NQ, and currently on this candlestick right here, it is a Friday. So going into the next week, I will be looking for us to target this pool of sell side liquidity right there. And on this candlestick is basically going to show you the weekly candlestick, and currently we're on a daily time frame. So as the daily time frame prints, this will also show you how the weekly candle is behaving. So we want to see the weekly candle is expand down to the downside, looking to take this pool of sell side liquidity. Now before I play price out, I need to identify how I'm going to look to enter this trade, and also how I'm going to frame my drawn liquidity. The way I am going to form my drawn liquidity is that I would like to see first us open on Monday, and then look for us to form the high of the week. So how would I anticipate that? I would anticipate on Monday us trading up, potentially into this volume imbalance or fair value gap, and then once we form the high by trading into this fair value gap, I then want us to then distribute to the downside, taking out this pool of sell side liquidity right there, and then having a bit of a retracement to then close. So that's how I'll form the weekly candle. So this is where I would be looking for the high of the week to form. So if we let price play out, okay, so this is Monday. Going into Tuesday, I would like to see us trade into this fair value gap right there. We trade into it right there. Notice how the bodies are not inside of the fair value gap, but the wick is. Wednesday, we have a sharp move to the downside, and you can see the weekly candlestick is now painting bearish. So we will be looking to target this pool of sell side liquidity right here. Going to Thursday, I want to see previous day's low taken out and our drawn liquidity being met. We hit right there on Thursday. Now on Friday, I want to see a TGIF setup, seeing a retracement back into the weekly range, and then forming the closing price. So let's see if that happens. We get that right there on Friday, closing right there. Now guys, before we get right back into the video, I really quickly want to talk about my private mentorship. Now guys, if you give me 30 seconds, I promise you, you will change the whole trajectory of your trading career. With this mentorship guys, I will teach you the exact model that I've taught to my members, which has helped them to scale to over 7 figures plus in funding from prop firms, and they are consistently making $10,000 a month from trading, and they are quitting their jobs for good. I have literal students that are making yearly and monthly salaries in a day. Okay, you guys might think this is a lie, but trust me guys, when you know how to trade, this is completely possible and is a reality that most people are living. Now you'll have a whole host of benefits as listed here. You can have a read for it yourself. This is a lifetime access for a one-time payment only. I have now put the price down by £100. It was previously $249.99, but you will now be getting it for a limited time only for $149.99. Okay, make the most of this offer guys. Learn the skill set properly. I'm willing to teach that to you guys here for a specific price. I will teach you the exact blueprint to help you get funded and quit your job guys and live a life you've always wanted to live. Stop wasting your money on prop firms blowing challenges when you have not even learned the skill set in the first place. Okay, so start your journey to profitability today. Click the first link in the description and be a part of the best ICT community in the world. So with that being said, let's get straight back into the video. Okay guys, so in this next example, I'm on the daily time frame for NQ, and this time our power of 3 candlestick right here is now going to be framed on a daily candlestick. So for the next day, I will be framing our entries on a lower time frame, but the power of 3 candle will be based on a daily time frame. Okay, so over here we took out the previous sell side liquidity pool before expanding to the upside, taking out this high right here for buy side liquidity. We then retrade back into a fair value gap as shown here, hitting consequent encroachment before rejecting it and then moving to the upside. Over here on this candlestick right here, we managed to close above this high here, above this candlestick right here, closing above it. So to me, the next day I'll be looking for a long scenario, looking to take out previous day's high. So if I draw this high out, this will be my drawn liquidity for the next day. Also guys, this is a down close candle and we close above it, so this will be a bullish order block that I would be looking to frame my trade idea going into the next day. So if I draw out the opening price, this will be very important to me. So potentially I could see a low form at the opening price, look for a reversal pattern at that opening price, and then look to target the buy side liquidity. So now if I drop down into a 15-minute time frame, I will now let price play out. This is the opening price. Let's play price out. Okay, we've now hit midnight New York. Okay guys, there's my New York midnight opening price. So I want to see price now form a Judas swing before seeing a displacement to the upside, so I can target the buy side liquidity above this high here. So let's let price play out. Okay, we start to move aggressively down. Right, see that spike there? We hit the opening price right there. So now I can go down into my lower time frame, 5 minute. Let's go a bit lower. Let's go into our 3 minute. Okay guys, now dropping down into a 3 minute time frame, I can identify this inversion fair value gap right there. So if I draw this out, I'll frame my entry off of this and look to see price support us all the way to take profit. So because it's quite a large range, I'll be looking to enter off of consequent encroachment. So I would have been filled on this candlestick right there as we hit consequent encroachment, and then my stop loss would be right at the body right here. Okay, so looking to target this buy side liquidity. Let's play price out. Okay, we hit take profit there. Let's continue to let price play out, see how the daily candlestick forms. Okay guys, so this is how the daily candlestick look like at the end of the day. So if I go out, this was your accumulation right there. All of this was your accumulation. This is where we're consolidating. We then get our manipulation down into the opening price of that bullish order block on the daily chart. So this was our manipulation, and then we distributed towards this high here for buy side liquidity, which was our distribution. So let me draw that out for you guys here. Notice how we bought below the opening price when we were bullish. And yeah guys, that's pretty much it for today. Hopefully you guys enjoyed the video. If you did, please let me know, and I'll see you again next time.